Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with another stock market update, a live one. And so I really wasn't even gonna do a video today. I had no plans on it, sitting here, going through the market, looking at some stuff, going through my fast movers. Had planned on just doing one this weekend, my weekly update, get you guys ready for the week. And I just happened to I'm going through tasty hourly top equities like I do right around 10. Excuse me. Drinking coffee because the week really has been slow. If I pull up the SPX, now you can see here was the expected move for the week. And you see we got up there. Basically, we got there on Monday. And then on Tuesday, see the market just been hovering around that expected move. And I was like, well, it's going to be a slow week. So I really ain't, have a whole lot. I think on Monday I did a video on a call about in Tesla. I lost money in that. You can see Tesla turned right around. I just closed that out and took the little small L, and then that was that. But then today, so I'm going through the tasty hourly top equities, and then I run across GameStop. Crazy. So then I hit Twitter, and they going nuts on Twitter on GameStop. You got all the little memes is out. Some of the old memes they brought back. And so I'm looking at it. This is crazy. Look at this setup. Now some news also came out, some type of news. I'm not quite sure what it was, but I know it came out. And I could show you guys how I know some news came out recently. I hit the trade tab. We're gonna go to grid, and you can see right here, the market just turned. This is what happens when the market just turns on you. Bloop, bloop, bloop. And you see, I mean, like literally, this was at 9:49, right? Then you came here, and then boom, the news came out at 10. That's when yeah. So whatever news came out at 10, which I could find, it dropped, boom, 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 and here we go. So the market turned because the market was up, and I was like, well, we just gonna, drift higher. Bitcoin is down almost 3%. Gold is up, and I'm gonna go over the GLD chart. But so when I seen that, and then I looked over, so the news corresponds right here, and then you got GME breaking out. And this is a crazy breakout. There's no reason why, to be honest with you, that I know of, why GameStop is breaking out like this. It's not it's the type of stock, in my opinion, that these meme stocks, if you remember during the pandemic, these stocks were going up when everything else was going down. So it's almost like an indicator, to be honest with you, of what's going on with the market. But this is a crazy move. So I mean a crazy move. You literally looking at something that went from, I don't know, $12 to like $20 in a week. This was right here. This move right here was on May 2nd. Today is the 10th. That's 8 days, right? Counting, we count weekends, but trading days, what was that? 6 days, 6 trading days or something like that. So you looking at this is crazy. Um, and I don't know why it's doing it. Uh, it could be some type of a gamma squeeze, and so basically what I did, I didn't do it in this account. This is a small account. Uh, did it in another account. I posted it to the community notes. I did a cover call. So I got long the stock, and I'll probably hold this stock until I'm gonna show you. Let's go over the analysis, then we'll talk about the trade. We're gonna zoom out. We'll go weekly. Let's go 5 years, right? So we can get it all. Right here is the all-time high of $120.75 in GameStop. Way back here in January, uh, that's January 25th, what 2021, right? That's when we got the all-time highs that week. This is a weekly candlestick. Now look at this. We got 3 straight candlesticks up right here coming off of it. It's got divergence down here. So price action continue to make lows. The momentum change right here. We can see that. We got divergence. We got a break over these levels right here. So it already took out this level here. This would have been the first level of resistance. This would have been the second level. Now you're going to hit some right in here, right around 22 bucks. If it breaks, if the oscillator right here go on the weekly crosses over, then I would predict that it would go take this level out. And this stock right here, when these stocks run like this, I really think it'll get out of this level and just start going crazy at that point. They do have now GameStop does have earnings coming up on, let's see, June 5th. So which is almost, that's about a month away. So you basically can get a big move, and this stock can move with with all the retail traders piling into it. I seen some stuff on Twitter. They said some whales are piling into it. Um, but what I wanted to look at, we'll talk about the trade that I did. Now the trade now, um, do not follow me into these trades if you don't understand them, if you're not comfortable with risk, especially in a stock like this. Whatever you risk in this stock, 100% of it is at risk. Meaning, like, there are some stocks that you can buy into and not worry about the stock going to zero or, like, a dollar or bankrupting or something like that. I feel pretty confident in saying that you can buy Apple, in my opinion. I could buy Apple and not and Apple not go to zero and go bankrupt, right? GameStop, I'm not sure. I'm not sure about saying that. So you have to be careful when trading these stocks. And I generally do not trade them. I just know I watched that movie and I said I ain't gonna miss the next little crazy move that happened. So without further ado, let's talk about the trade that I put on in GameStop. Basically, I did a cover call. I came out 42 days. I bought the stock, about 100 shares of the stock. Then I came and sold a call. I sold the 30 call right here. Now, when I sold this call, I'd have to go look at. If you check the community tab of my page, you'll be able to see exactly what I got filled for on the call 220. Now, I sold this call and I got 220 out of it. And but I bought it. So when you do a covered call, the point of doing the covered call is it's a bullish trade. You don't really want to make money on the call. You would rather make the money on the stock going up. Now the stock is going down since I bought it. So the money that I made on the call, I lost on the stock. I'd rather the stock go up. Now, with that being said, so if I'll show you how on the TastyTrade platform, how you would do that. You could come up here. Now you could also anywhere you see bid ask on here, you can buy shares on this platform. So you could hit the bid, you could hit up here. If you wanted to buy, you get to ask. See it pops up and then put it on 100 shares. And you're gonna see they're gonna margin you the $1,776 on this trade. Now, that more than likely they're doing that on this um, because of how volatile the stock is. I would imagine another on Apple, they may not margin you the whole thing. So you buy 100 shares here, and then you will find the call that you want to sell. You could come on here and now the one that I sold at the time was the 30. I probably wouldn't do that right now because I can see that the market has moved a little bit and the value of this has went down. So more than likely if I was doing it currently, I would come right outside the expected move maybe and or right at the expected move, maybe sell this 39 delta right here. Lock that in. Now you can see you're selling you'll be taking in approximately, let's say the mid price about 210. Let's just call it 200 bucks, just to make it easy. And you see how the value of the buying power went down because you're selling this call. Now, if I take this off and delete this, you'll see buying power is 1776 because that's what the price of the stock is trading at right now. And then you sell the call, lock it in. And that's basically what I did. I just sold the 30. Now, that right there, now if the stock runs up to 30, I just hold the call and let the stock blow through it. And what'll happen is I'd get the stock called away, but I get the price appreciation of from 19 bucks or wherever I bought it at up to 30, which would be about, let's say, let's ballpark it, it'd be about $1,000. Um, because it was like 19 and some change, minus the call that I sold. So then you'd have that, and then that would be the profit that I would make on it. Now, if the stock just um, doesn't make it up to this range and it just messes around and goes back and forth and retreats a little bit, backs off, and the value of this call just goes down, what I'll do once we get to right here at 21 days, which will be right before the earnings, I'll close that call. That call more than likely will have depreciated in value if it hasn't, depending on the movement of the stock. Either way, I'll be closing that call out, and then I'll be putting another one on or rolling that call out further in time and taking the profit. So that's the benefit of doing a cover call. Another way, something else I could have done is I could have sold a put. Now I could have came right here and maybe sold the 16, sold a put right here at 16 bucks. And you can see this has even lower buying power effect because if you sell this put for 258, now this is a bullish trade. So if the stock continues to go up, I keep the credit, and I still would manage this as well at 21 days and take whatever's left of the call. Sold it, so I'd buy it back for cheaper than what I collected and keep the remaining credit. So if I sold it right here, showing 258, I collect this, and then once the it gets to about 21 days, and then I would, which is, that's another 21 days from now, 3 weeks, then buy it back. It should be at a cheaper. So let's look at. I'll show you guys what I'm talking about right now. The 16 the 16 put, excuse me. I will collect 258. Now let's check this out. Clear that out. Let's go to 21 days. You see the 16 put right here at 174. So mid price probably right now is, man, maybe about $2. So those 3 weeks, which I think this is elevated because of the short term volatility right now, but more than likely this will be like probably about 158, something like that. And that means I'd make $100. Some th- that's those are the ways, if you're bullish. Now some people may say, hey, I don't want to take the other side. There's no way I short this though outright. Just me looking at this technically, there's no way I short this. I wouldn't short this with somebody else's money. Just because looking at the option chain, like I go out 42 days and look at this option chain. When I looked at it earlier this morning, this expected move was way out here. But look at the delta, to you can't even sell a 16 delta out here. So you got a lot of skew um in this so basically, let's go down to the expected move down here. Right? This is what I mean by skew in the option chain. If you come right here and look, so from here to here is the same distance. It's $7.17 from the price to the bottom side to the top. I know it looks backwards being on the but that's how the option chain is. Now I could click it and flip it around, but this is the original way how the option chains look. All right. Even though this is down, this is up on the chart or on the stop, and vice versa. So from here, what current price action is, this is $7. here and $7 here. Look at the delta down here at 11. That's a 10 delta, and you're only collecting 57 bucks right here. Now, if you go $7 up, look, this is a 39 delta, and you're collecting 200 bucks right here. There is no way I would step in front of this. Meaning you'd have to sell like 3 or 4 of these to equal one of these calls. That's skew in the options. That's what you call skew. And I keep a track of that on over here on my watch list. I got skew. Now this is measuring different skew, but I have a certain number that I look for when I think that the market is getting to bearish, or where I should be looking to short something, right? Now over here, when you see that, now let's go look at something like the SPY, and I'll show you the difference in the skew. We're gonna go 42 days. Hey, if you watching this after the live stream, or you watching this further out in time, hit the like button. There's nobody online for the most part that's talking to you this in depth about options for free. Let's get back to it. Now we're gonna go same thing over here. We have a $16.50 expected move. Let's go down to the extent to the bottom of the expected move. You see where it says 22 delta, right? You collect 290. Let's go over here. At the end of the expected move, look, you got a 22 delta, right? 22 delta here, 22 delta here. So that's telling you basically th- uh you almost got a what I would say a more balanced option chain. It's not skewed in either direction for the most part. You collect a little bit more on the call side, excuse me, on the put side than you do the call side, just a little bit more, but not a whole lot. To me, what that's showing me when I look at GameStop, let's go back to GameStop. To me, that's showing me these calls are worth more because you're taking more risk. I can look at the option chain and tell you where the risk is. You ain't getting that much money for selling these. You don't collect a whole lot of money for selling these calls, or excuse me, selling these puts, or buying these puts. You could buy these puts. Let's say you want to short. You say, I'm gonna short it for whatever reason. You're gonna buy it. It's cheap. $7 to the downside is cheap. If you say, I'm gonna buy the call, $7 to the upside, costs a lot more, right? It costs more because there's more value in these. There's no value here. It's very little value down here because it's very little risk, in my opinion. The market is telling you the risk is over here to the upside. So with me seeing I'm like, I would not short. I'm not going to short something where the market is telling, unless you want to take the risk, and the market is going to pay you for taking this risk. The risk equals the reward. You get more reward here for selling these options, but there's more risk as well. And the option chain is telling me that. I don't care. This is how I'm able to come on here, look at an option chain. I don't need to hear what the news is saying. I don't care what they're saying. I don't have to know what they're saying. I don't have to know what the news is. It doesn't matter, because I can look at this chart and tell you where the risk is in this market. And the risk is to the upside. So anything up around in here, if you decide to short GameStop, you're on the hook. That's one of the ways how I know, to be honest with you, that I don't believe that think about this take for a minute. That a lot of like when that happened, how those funds blew up. What was it? The fund that had the issue. I think it Melvin Capital or something like that. They don't know what they're doing. I don't know a whole lot about the guy. I don't know a whole lot about the fund, to be honest with you. But I just don't believe they know what they're doing. Because if I know this and I didn't go to school to learn any of this, right? Um, for the most part, I'm self-taught. Watching videos, I learned losing my own money, right? And this guy runs a hedge fund. How he not know that? Like, how do you not know that? It's just arrogance. Or, somebody came, you inherited everything you got, and somebody put you in a position. You don't really know what you're doing. And I think that's the case with a lot of these funds, to be honest with you. Given the same amount of capital, same amount of resources, I'll trade any one of them. Once you get to a certain level in this game, in this monopoly game, you can't lose. It becomes it's just this game of life, game of investing, trading, it's just like the game of Monopoly. But you gotta have enough of it. Once you get enough property and enough money in Monopoly, they can't beat you. You corner everything, and then every time they come around that board, they gotta pay you. And that's exactly how this is. So meaning you now somebody with endless capital, Imma show you exactly what I mean by capital matters. You could come down here because the risk, like I said, is to the upside for the most part. You can come down here and sell, let's say you got $1,000,000. You can come down here and come outside the expected move down here and sell garbage puts. I guarantee you people are doing that. You see this? You got 4,000 puts sold right here. Now, the buy look at the probability of profit, 80%. So you can come down here and sell this, right? Matter of fact, one of these you only collect $33. You'd be like, Ray, that ain't a lot of money, right? Okay. Let's sell let's sell 10 of these. Now look at the buying power. Say it's only gonna hold $10,000 out of your account. Now how much you gonna collect it? $330 on something that the market is telling you you got an 80% probability of profit. Worst case scenario, they come down there and hit it. Or it comes even if it hit it, it comes down there. Let's say you get put the shares at on GameStop at $10, 10 contracts. What's that? $10,000? So if you got $1,000,000 account, you don't care. You can sell a whole bunch of these. You can sell like 20 of them. It's still only 20 grand put up. That's what I'm telling you guys. And what it ends up happening is more than likely, it won't get back to this level within 42 days without half of the value of these puts coming out. So you might make 300 bucks in about a week and then come back and do it all over again. Just keep doing it. The more capital you have, the more you can do crappy trades out here. There was this one particular trader. I won't say her name. If you know about trading, then you'll know who I'm talking about. She would come out here and she had a lot of capital, and she would come out here and sell 5 deltas. Now look, this is the expected move. Excuse me. We're in the S&P 500. This is the spot ETF. Hold on, I'm about to cook. I'm about to cook. So now you have a large account. You come out here and come to the 5 delta, sell this sell 475, come over here to the 5 delta on the call side, sell 552. Now, I'm gonna lock that. All right, you collecting 114 bucks doing that. You got a probability of profit of 87%. You darn near you're gonna hit this for the most part. The majority of the time. You got to get a huge outside move to get hit here. You're outside of one standard deviation. You're almost two standard deviations. This particular trader was doing trades like this and just hitting them. And then every time like you get close to being where you may have a loss, you just roll it out in time. and you just continue to roll it out until you're right. You generally not gonna see moves where it come down. Maybe during COVID, you took some smoke, but that was probably it. And you still got enough time if you this far out, even with a large move, even if we wake up down 10, 100 points. Look, you can wake up down 200 points. Look where you at. You still got it still got to get all the way down here within them 42 days. And by that time, when you do that, if you know how to move your options around, you just rolling. The larger the more money you have, the easier it is to play this game. So the more capital that you have, the better off you are at doing anything basically. So I just wanted to come on here and really talk about GameStop. Say all that to say this: be careful if you're trading this stock. If you're buying the stock, your 100% of your capital is at risk in this stock because it could go bankrupt. Now the risk, let's just say 100 shares. Your risk right now is $1,700. Now the reward may be way bigger than that though in this stock, because of the simple fact that it's not rational what's going to happen, and we haven't seen a move like this these past 3 weeks since, to be honest with you, since then. Well, you had like right here since that mania, but back here ever since then, it's just been chopping. So I'll add this to the watch list, and probably what I'll do this weekend is research some other meme stocks. I'll go on Reddit, and then I'll get on YouTube and scour the rest and find some more. I know probably AMC. Let's look at AMC just because before I get off this video. See, AMC not moving at all. So right now it's just GameStop. I don't see. I can't think any other um meme stocks that I remember. But AMC is like, so you can buy this. I wouldn't buy this though. It ain't moved yet. Maybe it is gonna move though. Now this is a daily chart. Look at it. So, and right now it's only $2.99. So this is one of them things. Like, so if you did buy it, you wouldn't be out in a whole lot, right? You lose your 2.99. But right now it's not showing that it's doing anything. But hey guys, if you got something out of this video, make sure you hit the like button, subscribe. I only go live when I got something to say, when I feel like something is going on. And so this one wasn't planned. The weekly video will be out this weekend before the market starts up, and I give you my take on weekly movers and stuff like that. With that being said, guys, I'm gonna be out. Peace.